Hey guys, Ricky Analog here from StockTraders.net. Hope you guys are all having an amazing holiday season. Hope you had a great Christmas, and hope everybody's doing well. I'm gonna do a trade recap. Haven't done one for a while, and let's just get right into the formalities. As always, guys, this is just for informational and educational purposes. It's not a solicitation to trade. I'm not a financial advisor or licensed to do this, so it's just my opinion, guys. Make sure you understand that trading is risky. So unfortunately, I wish I had a beautiful trade to talk about, but there's never as many lessons in a great trade as there are in the F-ups. So I've got a great F-up for you guys, and I think there's a lot of lessons to be taken away from it. So let's get into it. The trade was Watt, and as you can see from this chart, didn't go so well, and I'll tell you exactly why. So we started out right off the bat in a bad situation, me anticipating the break. So the break would have been under 71, and it never cracked yet. I was risking the pre-market highs, had a few ads, I stuck to my risk, took it off, no big deal, right? Why in the hell did I jump back in on the next candle? Most likely, I've been thinking about this one a lot today and trying to figure out where my head was. And in my opinion, a lot of it has to do with the fact that it's Watt and just knowing the history and knowing it's a piece of trash. You get these emotions that come into play where you're not going to let a piece of trash like Watt get your money, right? So taking the early loss does something to your brain that makes it so you want to get your money back right away instead of being patient and waiting for your setup. And so you can see the whole way up the front side, I kept trying to anticipate things. And a lot of these are not big losses. A lot of them are really small, and some of them are actually gains. Like I think this one I lost a few cents. This one was kind of shitty because of the ads and stopping out over highs, but they're all necessary. None of these stops were stupid stops. They were definitely smart. If anything was stupid, it was the entries. Okay, so let's make sure that we first point that out. But let's get into what some of the lessons and takeaways from it are. As far as hindsight goes, I know it's easy to see now, but let's keep in mind this thing is not making any lower highs or lower lows. It's nothing but higher highs and higher lows. So that's your first clue to stay away from it. It's not backside yet, right? So, and I've never been about trying to top tick anything. So when we got up into the nines, this is where I had a lot more conviction, but it still needed to set up. And for some reason, I was still just anticipating the 9 being that level. And like you see, I scaled out some, but I was still adding, thinking I was getting the top. And that was like, the market always knows your breaking point. And to be honest with you, what really, really hurts the worst is I had some decent size on at this point, and I was using 61 as a stop. And I stopped out at 59. The high of this candle was 59. And, I think I stopped out at like 58 or 57. I just kind of smashed out with the hotkey, and it never hit my stop. And in fact, it just plummeted after. The price action after that stuff on that high volume was what brought me in here, even though it wasn't a full setup. Again, there was a few things that did bring me in on this one where it just had to do with this straight up price action nonstop, and then finally having a 5-minute candle that even was able to break the low of the previous one. And so at that point, I had some targets, and you can see as much as I was on tilt, all these early covers. The first target was the 5-minute 20, and I could have held everything till then. And I scaled out all the way into it, and then I added back here. When we started, I was trying to get ads back into 9, and we didn't get there. So I ended up taking what it gave. I think it was 830. No, what was it? 831. I think I took. And then when it broke down here, I think I chased a little more at like 94, at 794. And then it just kind of started bear flagging here. I took a little off at the lows just to lighten up. And then I can't use the chart I like on these, but this 30-minute will do just fine. Basically, locking into these washes here, and then I got another great ad actually right up there at 798 and was able to lock a bit more in. And overall it was slightly red on the trade. It was almost break even. It's not a big deal, and I mean I'm green on the week, but it's more about the mental drain that this front side puts in on you that makes it so what should have been a home run trade ends up being, for me, like in this case, was break even, but it wasn't even worth the mental drain that it took on me. Like right now, what is it? It's where I live. It's 3:30, and I feel like I'm ready for bed already. So it's just, yeah, that's looking in the chart. It's kind of painful now to see how emotional I was being. It was nothing but fear of missing out on this trade, and a lot of it had to, like I said, guys, a lot of it had to do with the fact that it's Watt. Figured, and I think I had the right thesis. I think this was, in the end, the liquidity event that I was assuming it was. They haven't announced any sort of offerings or anything. I'm assuming that they will use that $75 million shelf here in the next little bit. They do need to have cash to pay their executive compensation packages, which are huge, and they don't have revenues. But in the end, I think this was just a lot of people, like bigger positions. This was their chance to get out of those positions at as close to break even as possible. I mean, you can see the daily chart. This thing has been real nasty for a little while. Let's just look at the weekly. A little less noise, but yeah, it's just been a real bad downtrend ever since it lost that. Actually, ever since 20 was like pretty much the last ditch effort. And but yeah, this is what you guys don't want your charts to look like. And I'll tell you, one of the things I always point out, guys, is that my worst trades, the charts always look like these Christmas tree charts. If you guys notice, a lot of my other trades I post, the ones that work out well are me getting 1 or 2 clean entries and then letting the trade work. Whenever I start to see this kind of trading on my behalf, I know that I'm not trading mentally the way I need to be, and that something is not right about my emotions. There's a reason why I'm not being patient. So yeah, that was my trade on Watt. I'll tell you the good thing I'm going to take away from this is, I mean, like I said, financially this thing didn't even dent me at all. I didn't even get back yesterday's gains. It was a very small, like I said, almost break even actually. It's funny because it was almost break even when I was locking these in, and I didn't realize I was going to get another ad and put one more trade on. So this last piece here was what really, it's dang near a break even trade. But what I will say about it is, going into 2019, this is what I will use to humble me a little bit and remind myself that, look, it only takes one trade. And I was down a decent amount on these covers here. On this cover here at the top, was down a decent amount. Luckily, I was stuck with the trade and did nail it when it presented itself. But it's good to remain humble and know that it only takes one trade. Even for the big dogs out there, I'm telling you guys, I don't care what size account you trade. You could trade an account that's under the PDT, or you could trade a 7-figure account. And I know people that on certain black swans have gone 7 figures in the red on trades, and some have even blown up. So there's no such thing as an account that's too big to withstand any dumb trade. It only takes one. You need to remain humble. You need to know that the market's in charge, not us. Be patient. That's the biggest key, is to stay patient and wait for your setups. And even if you have to miss the trade, just know that the next best trade is right around the corner, guys. And some things to really keep focused on for 2019, because I have huge plans for 2019 to be the year for me that just changes a lot of things. Like, there's going to be some changes in the way I scale into things, and some of the risk parameters that I use. I'm going to start trying to push things a little more, and going into a situation like that, I need to make sure I'm on my A game. So a trade like this kind of recenters me and reminds me, like, look, dude, get on your A game, because if you're not on your A game and you're trying to really size into things, a trade like this could be much more detrimental than it was today. And thankfully, I was able to stick with it mentally and get it on the backside. Hopefully, this is something you guys can learn from a little bit. According to Twitter, people on Twitter don't lose, and only certain people share their losses. I don't know. I've been sharing losses plenty, and I'm not ashamed. I think you guys actually learn more from the losses than the wins. So hopefully you guys have checked us out over at stocktraders.net. We do have a 3-day free trial. If you're going to use that, I would say wait till the new year. Wait till we start getting some of the volume coming back into the market. I think a lot of people are still on vacation because once you sign up, your 72-hour timer would start. So make sure you either sign up on a Monday, Tuesday, or Wednesday so you get the 3 full days to use the chat. But come in, drop me a line. A lot of the chat members are really, really knowledgeable. We have some great mods over there and some really powerful tools. So we hope you all join us come 2019, be part of the stocktraders.net family. Until then, I'm signing out. Peace.